All right, we're back. It's the Tasty Crypto Show. I'm Ryan Grace. With me today, of course, special guest and fan favorite, Greg Magadini, Director of Derivatives over at Amberdata. Greg, how you doing?
Doing well. Thanks, Ryan. Appreciate it. I was out in New York, out in Chicago on the live show not too long ago. So it was fun to be out there with you guys.
Yeah, I missed you while you were in the studio. I wish we could have done the show together here in person, but this works, I suppose. Next time you're in the city, we'll have to do that. But I think it was a great show. And it seems like every thing that you've ever said as you've been on this network has played out amazingly, which I love to see.
I appreciate that. I'm on a lucky streak here.
Well, you're pretty good, my friend. All that said, what do you make of everything going on in the market, not just with crypto right now, but we've got to talk about gold just nonstop ripping higher, Bitcoin hitting an all-time high, not quite alt season, in my opinion, but equities at all-time highs, and I mean some massive moves in some of these tech stocks like AMD and Nvidia as well. What are you seeing out there? What do you think is behind some of this? And at the same time, I mean, are we in bubble territory? A lot of people want to try to call the top here. Are we there, or does it continue?
Yeah, that's a great question. So my base case scenario is don't fight this trend. This is a very sharp trend higher. I'm not super interested in getting long tech stocks personally. That's not my main market. I like these hard assets, Bitcoin, gold, silver. And the other big trade that I love to talk about is dollar yen. So dollar yen continues to rally, and we had some interesting developments over the weekend there as well. But I think overall we have a pretty bullish, intact trend higher in Bitcoin that's essentially in tandem with gold and being reinforced by silver and platinum. And so I think the bets are more upside going into the end of the year. And so finding ways to structure upside exposure in a smart vol way is the interesting play here.
Yeah, we were talking recently about some of the market seasonality, specifically with Bitcoin, that seems to be in play at times. And right on time to start October, you saw the Bitcoin price take off here. Is there anything to that? I mean, when you look at the data, like clearly the fourth quarter tends to be a period of outperformance, less so in the last 5 years, but the trend is still there. And even, I suppose, in some months where you've had a okay September, it's really amplified to the upside. And a lot of times in the last 5 years, it's played out into that Q1 period too. In your opinion, what's behind some of the outperformance that we've seen historically? We call it Uptober. Others refer to October as it as well. Like, is there anything to that, or is it just coincidence?
So it's funny because I had a friend just text me. He said, "Oh, I set myself a note 2 years ago that we'd be at new all-time highs." This is yesterday on October 7th because of XYZ cycle indicators. And look at us now. We're at new all-time highs. And I was like, "Oh, that's pretty interesting." That's a good forethought. I hope he wrote up a lot of Bitcoin, but
right.
in my mind, those are less interesting ways to trade it. I fall more into the coincidence camp just because seasonal patterns and cycle patterns are so well known that it creates trading setups against the crowd, so to speak. If everyone's getting long this cycle, there's incentive to kind of slam longs and liquidate them to the downside and things like that. So those types of seasonal cyclical patterns to me are less interesting and more in the random noise coincidence bucket, I think, personally.
So what do you think then is driving price action here, whether it's Bitcoin or, as you mentioned earlier, new highs in gold, and kind of how are you looking to structure a trade around that?
Yeah, so I think what's going on is a bigger macro picture, and I like to call the theme the debt supercycle. And this is not the end of this debt supercycle ninth inning. It's sort of the beginning of it. And that's why I think standing in front of any of these trains is a bad idea. So gold essentially is up something like 55% year to date. Only a couple years ago did it break 2,000 for the first time. And so to me, this is a very telling sign of the fiat situation that we have. We have global inflation. It's not out of control inflation, but it's there. And so I think people are allocating outside of fixed income US Treasuries into sort of hard money assets like gold. I mentioned Japan earlier on the show here, and we just had a new president elected in Japan, and she is the sort of the Japanese Trump, so to speak, and she has a lot of policies to essentially keep rates low, try to grow their way out of the debt to GDP ratio in Japan. China hawk, there's no real military in Japan. It's all guaranteed by the US and the Allies after Second World War. So where does the money come from to do a military buildup? It's going to be printed yen. And then you have the back of the yield curve starting to lift off due to inflationary forces. And I just think that yield curve yield increase is going to roll down more and more towards the short dated stuff. And at some point, with such a high debt load, if you can't refinance at good interest rates, well, you have no other choice than to have the central bank to continue to buy and potentially extinguish existing debt, which is called debt monetization, which is a terminal event for fiat. And so that's why I think we're seeing a lot of these flows, short yen, long gold, long Bitcoin, start to come into play. And I don't think this is the beginning. I don't think this is the end. I think this is the beginning.
Yeah, the world and the markets have kind of collectively woken up to, I mean, something that obviously people have been talking about for some time, but maybe the collective realization that the only way out is to just print more money.
Mm-hmm. Yeah, and what's the off ramp? The off ramp is bearer assets. Gold is a bearer asset, meaning if you own it in your possession, it's essentially yours. And crypto is the perfect bearer asset with perfect portability. So it's the only off ramp that is an asset that isn't equal to someone else's liability.
So do you think like some of the price action that we're seeing here in crypto, or, I always use crypto and Bitcoin interchangeably, but really talking about Bitcoin here, do you think some of what we're seeing is just catch up to that move in gold, which given the flows and the size of the market, relatively speaking, if this is the driver, you see that first? Is this just Bitcoin catching up? And then the second part to my question, like, where do you think we go? I mean, I'm not asking you to pick a price target or anything, but some people are looking at this and thinking, okay, at this point in the cycle, it's going to play out just like all the others, going to get a big God candle. Maybe it's the result of some catalyst, possibly. I mean, is it that, or do we grind higher? But ultimately, like if you're saying this is the kind of the beginning of how you think this maybe plays out, and it depends on the time frame, I suppose. But where do you think we ultimately get to here? Because one last thing I'll say is, a couple of years ago, if people were talking about $1 million Bitcoin, they kind of got laughed at. You say that today, and it's kind of accepted.
Yeah, definitely. And something you had mentioned on the Tasty Live show maybe a couple months ago, does it really matter what the price is? And I kind of like to keep that in mind. It's really not about the price. It's about, M2 supply, M2 digital supply, how many people are bought into that system, and is that system growing? The price is almost irrelevant. It's just a unit of account. And so from a trading perspective, price pays, but from the functionality perspective, it's really about how many economic users are using crypto as a store of value or potentially a medium of exchange. So I think the price can go a lot higher. Right now, the market cap of gold is slightly above 25 trillion, and Bitcoin is something like 2.5 trillion, so 1 to 10. And the gold trend looks intact, and it looks like it's going to keep going higher. So Bitcoin has some catching up to do in certain terms, but also could potentially outperform if the world starts to adopt Bitcoin as a true store of value or medium of exchange. Gold's been around for thousands of years. Bitcoin's been around for 16 years. So it's a little bit of a harder onboarding sell to the average consumer, but it's just something to keep in mind.
Yeah, I think you get there though. And at the same time, I mean, when you look at adoption, it's like, okay, who are the new users? And the new users today more so tend to be large financial institutions and arguably maybe under the surface nation states, as you see some sovereigns or some of these flows are reflective of clearly larger pools of capital. Okay, what's the trade then, in your opinion? So we've got all-time highs in gold, all-time highs in Bitcoin. We think it's going to continue. How do you express the view? Because you always bring the trades, my friend.
Yeah, so a couple things here. So I want to talk about this. This is the term structure. This is realized volatility versus the implied volatility of the past. So how did the implied volatility predict the realized volatility? So it's the realized variance risk premium. So we really see the front end of the curve finally pay vol buyers. So all that short dated stuff all the way out to 14 days is a little bit of a reward for vol buyers. So that's interesting. And I don't think this move is over. 30 vol is not that high. Gold vol is about 18. So, gold versus Bitcoin. Bitcoin has done a lot crazier moves than gold has. So 30 vol is not that high, contextually speaking. If we look at, I just want to, before I talk about the skew, if we look at the term structure, we can really see that those end of the year options are really sort of the tipping point in terms of vol pricing. So if you are going to buy some Bitcoin volatility, I think the short-term options are more interesting. The move is happening right now. So gamma is sort of the exposure that you want to the upside. And if you want to structure a trade that is maybe vol neutral or maybe short vol from like a 1x2 perspective, selling those December contracts are sort of the interesting point in terms of volatility pricing. The trade, I think we've talked about this trade before. I just still think it's really relevant, is the risk reversal. So this is essentially a year of risk reversal data for 90-day options, which coincides with end of year options. So we can see that the risk reversal is negative. So that means the 25 delta call is cheaper than the 25 delta put. And if we break that out into the separate winks to sort of kind of decompose what's going on, we can see that the call relationship, so this is going to be the 25 delta call divided by the at the money vol on the blue here on the top side, and then 25 delta put divided by at the money vol in orange here at the bottom. We can see that the put wing is expensive, and then the call wing is cheap versus the past year. So really, this gets interesting in a lot of ways. A, I want long delta exposure. B, if I can get that risk reversal in a cheap fashion, that's very interesting. And then something that you mentioned earlier, if we get some of this nation state buy-in into Bitcoin, this thing will go nuts. I mean, we'll get to the 200 handle pretty quick in terms of spot prices. And without the nation state buying, I think the trend takes us up to 150K, just judging by sort of what's going on right now and the relentless march higher in precious metals. I don't see why Bitcoin doesn't follow that.
Yeah, that was kind of the price that if you just arbitrarily throw something out there, we love big round numbers, but that's kind of the spot where, okay, what's the next natural stop along the road? Seems to be you could probably get to 150. This is interesting to me. So you sell the 25 delta put, you buy the 25 delta call, risk reversal. The puts are rich versus the calls here. If you look at the chart you've got up on the screen, you go back to the April period where we had a lot of volatility and the market actually traded down to about 75,000 or so. So maybe for people it makes sense then that there's a bid into the put options. What do you think is behind the bid in puts here? I mean, is this just everybody thinks, well, it's not going to go higher. We've got to start to hedge the downside. But at the same time, it's not like these puts are cheap either, relatively speaking.
Yeah, so the April is a great comparison. That was peak sort of Liberation Day panic. And the vol profile or the vol surface right now for 90-day options mimics kind of where we were back in April. So I would fade that vol profile. We're not in the same environment as we were in April. In terms of why are things the way they are right now? So I think FalconX did some really interesting analysis using our data. They looked at the open interest and volumes of ETF options, IBIT, ETH versus Deribit. And this is the first time that Deribit has been eclipsed. They've been eclipsed by the ETF, spot ETF options, both in open interest and volume terms, notional volume terms.
Wow.
So, yeah, so to me, this is very interesting because it's showing us that a different class of investors are now the main users or the main participants of crypto volatility trading. And I think I've made this point on the show before, but this class of investors, aka institutional investors, typically trade Bitcoin as part of a risk on portfolio, meaning that they sell covered calls for yield because there is no yield in Bitcoin, and they sometimes buy protective puts. So that's my thesis of why the volatility surface is priced the way that it is. And that's the source of the opportunity. When there's kind of one-way flow and there's demand for liquidity, taking that liquidity, taking the other side of the trade can be really profitable, especially if realized performs in a different fashion. I don't think realized vol for Bitcoin is necessarily going to trade like equity vol or S&P 500 options. I think it's a different beast and it trades more like gold. And so it can gap up in ways that are very volatile.
The fact that you have all of these institutions that are stepping in via ETFs and looking to generate yield by overwriting calls on the position, do you think that dampens upside vol in any ways? And I guess the reason why I'm asking that is because quite often, maybe not every day or quite often, maybe that's not the right term, but at times we've seen that dynamic of almost like the tail wagging the dog in markets. You saw this to an extent during the COVID period when you had just rampant call buying by largely retail participants, maybe not just retail, but you saw a lot of reports of that. And so you got these big gamma squeezes on the upside as dealers hedge. Like, do you think the opposite is true here if dealers are all long these calls that these institutions are selling in size against these fairly large ETFs? Like, do you read into that at all, or is it just something where you get the realized move regardless because we're still early stage and the flows into this thing are really what matter?
So I think that's a great point. The dampening effects of long gamma from dealers, delta hedging, things like that. I think that's very true for the traditional equity space because outstanding options open interest is such a large percentage of the underlying market caps for, say, S&P 500, spider ETFs, things like that. But in crypto, the vol space is still relatively small compared to the underlying spot market in terms of market cap versus notional open interest. And so I think the tail wagging the dog effect is not yet big enough to actually move the spot market. So I think realize is going to do what realize is going to do. But there is interesting sort of opportunities being sort of a liquidity provider in a relatively small market of crypto volatility. In the future, I do think crypto vol expands its footprint and we could potentially see some of those effects. But as of right now, I would say realize is going to do what realize is going to do.
Okay. So then, in summary, maybe fair to say that relatively speaking, call options are cheap in Bitcoin right now. Is that fair?
Yes.
Okay.
They are cheap, yes. And if we're going to play the trend for this kind of continuation of this sharp move, I would play the short end of the volatility term structure. If this is kind of a longer term play, hoping for sort of nation state buy-in, you could play the sort of the longer term, maybe the 90 days and roll those out, or maybe even go further out in the expiration cycles.
Would you ever do anything where you have on a calendar or a diagonal where you're going to be short that volatility with a longer duration or tenor versus, where you're long? And I get that you can size these things differently depending on where you're at, but would you go that approach, or how do you think about trade structure for everybody that's watching?
Yeah, actually, that calendar play is really interesting. So it's going to be a little bit margin intensive here because you'd be short the calendar, so you'd be long sort of that October 31st, maybe the November 28th contract, and short that December 26th contract. So you can get long to gamma and short to vega, and you're selling the expensive vega, and then you're owning sort of a lot of gamma on the front end and hoping for a continuation of this move. That's actually a pretty interesting trade structure. I would say it's a little bit more complicated than sort of your classical trade structures. Even the risk reversal is just kind of simple, and you can delta hedge that thing if you want. But the calendar is an interesting play. It's definitely something I would look at, and if I did put it on, I would sell the D's contract and buy the Oct and maybe the November one.
Are you seeing the same profile here when you look at something like Ethereum via, let's say, ETH-A? Do you see the same kind of spread with the term structure?
Yeah, actually, let's go ahead and pull this up. So anyone who's not familiar with our platform, you can go to pro.amberdata.io. This is our GUI or website. You can see all the exchanges we support. If I go to the TradFi section, I can go to the various tickers. So ETH-A, we can pull this up right here. And so we can see some of the vol pricing and surfaces. So if I go, let me go ahead and just kind of look at ETH-A in terms of vol and risk reversal skew. So ETH-A is actually kind of interesting. So if I kind of isolate maybe, again, that 90-day delta, you can see here we're actually positively skewed. So the 20 delta call is more expensive than 20 delta put. So that's kind of interesting. It makes a sense, for if the market's expecting us to finally break through all-time highs and kind of continue from 5K to 6,500, something like that. Sort of positive spot vol correlation being priced into that market. That's kind of interesting. But the divergence in Bitcoin is surprising for sure. And that divergence in Bitcoin creates a nice opportunity. In terms of the term structure, so we can see here, if I take the forward vol, we can really see 63 and 84 days out, just sort of the most expensive. But ETH has a very flat term structure, for the exception of the very short end, as we kind of consolidate between 4,500 and 5,000. Everything beyond that is pretty flat in terms of volatility. So volatility is 71 going out a couple years. We got 6 months, it's 73, 74-ish. So that's kind of interesting to look at. And if we decompose the different wings for, say, 84 days till expiration, let me go back a little bit here. And so we can kind of just see that the call wing is definitely pricier in ETH than the put wing. And so the vol surface is more bullish and optimistic to upside surprise in ETH than it is in Bitcoin.
In terms of it's cheap, where you just aren't seeing many people kind of, let's say, betting on that happening just yet?
I think it's priced in for ETH to have some upside.
Oh, God, I see what you're saying. Not so much like the trade setup, but like how it's being expressed right now. Obviously, those calls are more expensive versus what we saw with Bitcoin.
Exactly.
Okay, interesting. So the risk reversal seems to be the trade or potential opportunity, I suppose, in Bitcoin, not so much seeing that in ETH at this point. And then when you look out kind of on the curve here, if I'm reading this correctly, and maybe it's just a function of you haven't had the realized move in ETH that you've had in Bitcoin, where Bitcoin's at an all-time high and ETH's kind of just chopping here around 4,500. You think that's the explanation for why you have a somewhat flat surface there? You just don't have, and maybe also it's just like the product's newer and smaller.
Yes, the product's newer and smaller. That's for sure true. But I think your analysis is right. We are kind of waiting for this moment to happen, and as we approach expiration, the term structure just kind of falls down 10 points, and I imagine once we get that breakout, this thing flips straight into backwardation.
Yeah, just need that realized move for everybody to then get the FOMO and pile in.
Yeah, that's an interesting, maybe short-term setup. If I was day trading the underlying spot market or the futures market, any sort of breakout probably has some good follow-through. And then in terms of sort of the options market, I think once we get that breakout, those short-dated options just pay the price and kind of ride that breakout, I think makes a lot of sense.
Yeah, one of the trades, is I mentioned to you prior to going live here, one of the things that I've been doing more recently, and I'll start to post these on the follow feed and the tastytrade platform as well, but I've put on a a decent sized ETH position, and I've been selling some calls against it because, as we've discussed here, and not to go to strikes or anything, but as you go out November, December, I mean, you can get quite a ways away from the current spot price and bring in some decent premium. Where if you're bullish ETH and you do actually get this move, you're getting paid to sell those calls against it. And as you just showed, you get some premium in those call options as well. So another trade idea for everybody.
Yeah, I love that. And I think, we are still waiting for SEC approval for some of those proof of stake reward distributions from the ETFs. I do think that's an interesting catalyst that could potentially break out prices. And that gets really interesting if you're selling those covered calls, because now you own ETH, you get the staking rewards, and you get some covered call yield. That's a nice yield machine, so to speak.
So, Greg, to that point, I don't know if it was yesterday or a couple days ago, I saw a headline where Grayscale is staking some of the Ethereum and passing on rewards to investors in the ETH trust as well as the mini trust. But I was unclear as to whether that was an SEC decision or they're just going ahead with something, or if there's a different structure to the product versus, say, ETH A. Do you know anything more about that, or why they just suddenly decided, hey, we're just going to do this?
Yeah, that's interesting. I haven't looked into that, but I imagine there's probably a few structures. Like in traditional finance, good earnings, sometimes instead of paying out a dividend, they'll buy back shares. So I imagine maybe there's that type of mechanism going on with those proof of stake rewards. Maybe you do another, instead of paying out the straight dividend, you do some other type of function that is economically equivalent. But I do think an actual dividend is a little bit more attractive for those long-term portfolio holders who live off income and need income. And I do think that traditional setup would be a real catalyst for ETH. But I'd have to check out what you mentioned. I didn't look at that.
Yeah, I didn't really see the details around it, but maybe again, it's like you've mentioned with what some of these treasury companies are doing too, where they're putting the ETH to work, so to speak, and then that's reflected in the value versus it's just a straight pass through. But in a world where you get the staking rewards in the form of a dividend, I mean, I've got to imagine that incites some capital inflow, or at least a little bit more interest from some of these larger institutions to learn a bit more about ETH. And I also think it's just a matter of time too, right? Like, we're seeing these massive flows into Bitcoin, where before it was 100 million, $500 million. Now it's like you could get a day where you're well over $1 billion in terms of inflows, in a week where you're 5 billion plus in some of these products. I think it's just a matter of time until more institutions, more people just learn a little bit more about ETH. Whereas like the Bitcoin story, it's easier to understand, I suppose. It's digital gold, right? Okay. Break that down, you kind of get it as a traditional investor, like that makes sense. Well, what is ETH? ETH has lacked maybe a value prop for a lot of people that are outside of the space, or like a story. But I think as soon as people have a reason to look into it a little bit more, maybe it's just they become comfortable with the Bitcoin investment. It's gone up. We get that. All right, what else is there? Bitcoin's the gateway, so to speak. I think you're going to see the flows, and maybe you already are, right? Recently, we've seen some sizable money come in there.
Yeah, it's very interesting. Absolutely. And I think ETH, because it falls into the altcoin category, then people start questioning, well, should I buy ETH, or should I buy, Solana, or something with a smaller market cap, or what about XRP? And that story, like you said, is less clear. Bitcoin is like, it's a clear story. And so I think that is also part of the dynamics going on here.
One last question for you, because everyone always wants to know in terms of timing, like, is there anything that you're looking at for when you might want to rotate, if you do want to rotate into any other trades outside of Bitcoin or maybe outside of ETH? Like, when is Altseason? Does Bitcoin have to hit a new price? Does the Fed just have to take interest rates lower here? Do we maybe possibly even need to see, some sort of open market operations or some sort of QE? Like, what would you look at, or kind of is it just price action for determining when we might be in altcoin season?
I think the story narrative has to shift. So we saw a lot of Bitcoin outperformance after the SVB banking crisis in 2023. And that story kind of has held steady. Then you had, the Ukrainian war and all, Russia-Ukrainian war and all that stuff that also kind of supported sort of the big picture story that helps Bitcoin. Now we do have a massive AI boom and NASDAQ tech stock rally that should help theoretically for crypto Web3, which is crypto tech, but we're not seeing that translate yet. And I think the truth is that this is still debt-related macro flows as opposed to innovative efficiency technology flows. And so that's what I would have to see the narrative shift in my mind.
Awesome. Well, Greg, we'll leave it there. As always, appreciate you coming on the show. It is my pleasure. So thank you for coming on here. Before we let you go, though, where can everybody find you, learn more about Amberdata, and use the tools that we're showing here on the show? Because you've got some really powerful stuff and you're doing some great work over there.
Yeah, absolutely. So if you guys want to check out the website and sign up to use some of these tools and look at these charts, you can go to pro.amberdata.io. And if you want to read the weekly newsletter where we have our analysis on a Sunday release, you can go to amberdatederivatives.substack.com.
Awesome. Well, Greg, thanks again. We'll look forward to having you back on the show here in a couple weeks or sooner. But I will be back on Friday with Shelly on Beans over on the Tasty Crypto channel, streaming live. We'll be back on Monday here on Tasty Live for the Tasty Crypto Show, same time, same place. Until then, I'm Ryan. Thanks for watching.